Idehen. And then this class is brought to you by Isaac Humanitarian Foundation. I'm taking your financial accounting under the topic Departmental Accounting. This topic is more or less trading, profits and loss accounting. So, but when we are now talking about departmental accounting, we are merely talking about departments of a single company. So a company can decide to have more than one line of business. When a company has more than one line of business, they ought to prepare what a departmental account or a separate account for each line of business. Why? For them to be able to determine which line of business is performing well than the other. For them to be able to determine which line of business is what more cost effective, or which line of business is what more costly than the other. So the reason for departmental account is for us to be able to what differentiate from one line of business to another. It also helps in all this financial advisory, and also when it comes to what taxation, because a company, there are some line of business that are not subjected to tax. Like talk about the when you are into sales of what baby items, or when you are into the sales of what arms and ammunition and all these other things. Items like that are not subject to tax. So if you combine them together with other things that are subjected to tax, the tax authority might just charge you a flat rate on all your what profits. So that is the purpose for what preparing a departmental account. So it is necessary for us to what they set, put all the line of business in a separate, account, but still under one umbrella. That is what the departmental accounting is talking about. So we are trying to determine the profit of each line of business relating to what one entity. So how do we do that? So everything is still the same thing, it's still the same compared to what the normal trading and what our financial account is all. So, but the only difference in departmental accounting is that what expenses are what apportioned. Expenses are apportioned on some basis, or based on some estimates or whatever you call it. So expenses are what apportioned between all the line of business involved in a particular company. So what I'm saying now is that the trading accounts, trading profits and loss accounts are what prepared in a column for each line of business. But the balance sheet, or now we call it the statement of financial position. The statement of financial position is prepared in a single column. Why? Because statement of financial position is only meant to show the financial affairs of the business as at a particular point of time. It's not meant to disseminate between the line of business. We just want to know what the position of the business. That's the statement of financial position, or you call it balance sheet. So now we are going to look at them. So, but now, how do we apportion those expenses? We apportion the expenses based on maybe 3 or 4 bases. The first one you can take. The first one can be what? On equality basis. Equality basis. Basis of apportioning expenses. Basis of apportioning expenses. First one on equality basis. Second one is on turnover basis. Turnover basis. Third one can be on the basis of what? Floor space area. Floor space area occupied. And the last can be direct basis. Direct basis. Equality basis is just saying that what the expenses should be shared equally between what the line of business. So if we have 3 lines of business and we have a particular expenses that has been what? That has been said that it should be shared equally, it means that we are dividing the expenses by what? 3, which 1/3 will be taken by each what? Department. Then turnover basis. On turnover basis, it's saying that such expenses should be shared on the proportion of what? The turnover. The proportion of turnover or revenue or the sales. So the proportion of turnover realized by what? Each department. So we are summing up all the total what? Turnover or sales of all the what? Departments. Then taking what? Each portion of turnover on the what? On the total, and apportioning them on the expenses for us to be able to determine the expenses that goes into each department. So turnover basis, then floor space area occupied. This is normally used when we are talking about when the departments are in one building or under one roof. So the expenses, there are some expenses that you cannot trace directly to a particular department. So such expenses will be shared on what? On floor space area occupied or floor space area. So take for example rent. Yes, rent, that's the most suitable example for that. So if in a building the departments are being what? Run in a single building. So what will you do? There are 3 departments in the building. So it means that what? The area occupied by each department will be apportioned in proportion of their what? Will be apportioned on the basis of what? Floor space area occupied. So the area they occupied, you have to what? Apportion it on what? The area. You have to apportion it on the basis of what? The area they are occupying. A particular segment or department is occupying. So that's what floor space area is talking about. And direct basis is normally not in use because it costs more in some time. It costs more to trace a particular expenses to a particular department. So direct basis is normally, it's hardly used for departmental accounting, except it's a very large company. So, some departments may transfer goods from one department to another. The department will transfer goods from one department to another, but they are still of the same company. So what will happen in such circumstances? In such circumstances, the department transferring, we have to what? Debit the cost of goods sold. Or such department transferring, we have to credit the cost of goods sold of such department transferring to reduce the amount of cost of goods sold and what? Debit the department receiving. So that is how we treat the transfer, or we call it inter-departmental transfer. Departmental transfer. This is when a department transfer goods or render service to another department of the same organization. So the department transferring, we have to remove the cost of such goods from their cost of goods, cost of sales. So and then add it to what the department receiving. So that is just it. But normally, some department will charge it at the cost plus a percentage. In that situation, they say the cost plus a percentage would be transferred to the department receiving, and a profit will be recognized by the department giving. But in many situations, it is forbidden, because a company cannot sell to itself and make profit from sales to itself. So that is why it is basically on cost. So we quickly look at examples under departmental accounting. Alright, we have a question on the board now, and we are going to look into it briefly. Here's the account of what? Of Idehen Enterprises for the year ended 31st of March 1999. And we are required to prepare what? Departmental trading profit and loss account for the year ended 31st March 1999. To do this, we have to apportion the expenses for each department. So let us draw our account Idehen Enterprises. Departmental trading profit and loss account for the year ended 31st of March 1999. So, from this question, we have three departments, A, B, and C. Departments A, B, and C. So we have three columns in there. We decide to have a total column as well. So we have A, B, C, and what? Total. So we are taking them from what? The opening stock. So we have opening stock. How much are our opening stock? 2,100, 450, and 600. 2,100, 450, 600. What is the total? Total opening stock is what? When you add all these three, you get the total opening stock to be what? 3,150. 3,150. 3,150. We have 3,150. Then after opening stock, we do what? We add purchases. Our purchases, add purchases. 12,000, 8,000, and 10,000. 12,000, 8,000, and what? 10,000. So what is the total? This is 20 and what? 30,000. Their carriage inwards, we check sales, purchases, labor expenses, sales and salaries and wages, advertisement, discount received. So we don't have carriage inward. So what we have next now is to add this to get our cost of goods available. When we add this, we get our cost of goods available. This is 14,000. This is 14,100. And here we have 8,450. Here we have 10,600. What is the total we have? The total then should be what? 33,150. So this is our cost of goods available. Then we continue. We less our what? Closing stock. Less closing stock. Closing stock. We have 500, 940, 680. 500, 940, 680. We add all these three to our total 500, plus 940 plus 680. This then gives us what? 2,120. So we are lessening there, we are removing closing stock. So then we have our cost of goods sold. Cost of goods sold. So from here 14,1 minus 500, we then have 13,600. 13,600. From here, 8,450 minus 940. 940. What do we have? 7,510. Then here, 10,600 minus 680. We have 9,920. So from here, we then have what? 31,000 and what? 30. So let us check whether this will give us this when we add up. 13,600 plus 7,510 plus 9,920 gives us 31,030. So we are good to go. So cost of goods sold. Now from here, I have a cost of goods sold. So then we put our sales. Sales is how much? We have it in departments as well. So we have A, B, C, and what total? Our sales is how much? 25,000, 12,000, 17,000. 25,000, 12,000 what? 500, 17,000. It gives us a total of what? 54,500. So by removing our sales, remember our cost of goods sold from our sales, we then get our what? Gross profit. Gross profit. So here we have 25,000 minus 13,600. We have 11,400. 12,500 minus 7,510. We have 4,990. Again, 17,000 minus 9,920. We have what? 7,080. So 54,500 minus 31,030 equals to what? The total 23,470. Let us add this to see if we get that. So we have 11,400 plus 4,990 plus 70 plus 7,080 equals to 23,470, correct? So we go on, here's our gross profit. We take it to our what? How about total? 25,000, 12,500, 25,000, 12,500. 17,000, and then what? 54,500. So you can take our gross profit towards profit and loss account. So you have our gross profit here. What amount of our gross profit? We bring everything here. 1,400. 14,000 and 4,990, 7,080, and 23,470. Now we can reduce all our expenses: delivery expenses, insurance, rent, salaries and wages, administrative, and so on. So here, delivery expenses. Delivery expenses. Insurance. Insurance. Then we have what? Rent. Rent. Salaries and wages. Then followed by what? Advertisements. Advertisements. So we have advertisements. Discount received. Discount received is income. So discount received will come here. Discount received. So now we can now apportion all the expenses into the account and what balance off. So we apportion all the expenses. So we start with what? Delivery expenses. What do they say here? Delivery expenses is what? On sales proportion. What is our sales here? Our total sales is what? 54,500. So meaning that Department A will take 25,000 out of what? 54,000, apportioning it on what? Delivery expenses of 1,800. So what can we do here? So we then have delivery expenses. Expenses. Look at our sales. Delivery expenses for Department A. Department A will then be what? 25,000 over what? 54,500. Department B, that is of what? What are delivery expenses? 1,800. Then Department B, it then be what? 12,500 over 54,500 times 1,800. Then for Department C, on sales 17,000 over what? 54,500 times 1,800. So we are going to calculate it and see what we get. That's how we get our what? Our apportionment. So what we do now, 25,000 of the 25,000 by this times 118. So we have 250 divided by 545 times 1,800. So here we have 827. Then come to the rest. Where we have 413. And here 17,000 divided by 54,500 times 1800 is equals to, so here we can have 5, 6. Let's say we can have 55. So this is how we apportion the delivery expenses. Then we put them delivery expenses 827 413 5 5, making a total of 1,800. Insurance is where insurance is on the basis of what 663. So calculate insurance on the basis of what 663. Insurance. So department A, we take the addition of all the 663 will give us what? It now be 6 over what? 6 plus 6 plus 3 times the amount of insurance. What we have as insurance? 2,500. 2,500. So we have that what we have for A, B, and C. 6 over what? 15 times what? 2,500 over 1. Then this one being 3 over 15 times 2,500 over 1. So we apportion them. So we do the same thing for what? Salaries and rent based on this. So we do the same thing for salaries and rent. So here we have 6 divided by 15 times 2,500 is 1,000 for insurance. 6 divided by 15, that is 1,000 again, since they are in the same ratio. Then 3 out of 15, 3 divided by 15 times 2,500 insurance. So we have 500. So the total being 2,500. So I said we do the same thing for what? Rent and salary. So this is rent. So I'm going to calculate that 6 out of what? 15 times the amount of rent for what? Department A. 6 over 15 times 4,200 for department A. 6 divided by 15 times 4,200. That gives me 1,680. 1,680. Do the same thing, 1,680 for department B. Then department C is taking what? 3 out of what? 15 times what? For what? That's for rent. Rent again 4,200. We have 840. So when you add up the 3, 1,680 plus 840 gives you what? 4,200. 4,200. Then salaries and wages. Salaries and wages, the same thing, same ratio. 6 divided by 15 times what's our salaries and wages? 4,000. 1,600. So this is 1,6 and 1,6. Since they are of the same ratio, ratio 6 out of 6. Then we have 3. So we have 3 divided by 15 times what? 4,000. So that will give us what? 800. Everything, all the 3 gives us what? 4,000 in total. Then the last one, which is advertisement, we are told that advertisement should be shared. What is advertisement? Okay, delivery expenses, salary, insurance, and what? Rent. Other expenses have to be what? Apportioned equally. So we are not giving how we are going to apportion advertisement. So any other expenses equally. So meaning that we are dividing advertisement by what? 3. Because we have 3 departments. So advertisement is what? 4,500. Advertisement 4,500. We are dividing it by 3. Divided by 3 equally. So each we take what? 1 5. 1 5. 1 5. And 1 5. Then the total will then be what? 4,500. So that will be what we have. Then the last for this discount receipt. Say the discount receipt as what apportioned according to what purchases. So we take the basis of purchases for discount receipt. So discount receipt, the total purchase is what? 30. So we are going to take for department A 12,000 over 30 and 12,000 over 30,000 times the amount of discount receipt. That's for department A. So we have for department A discount receipt. Discount received. Department A will now take 12,000 over what? 30,000 times what? What's the amount? 5,000. So this one gives us what? 12 divided by 30 times 5,000. So this one gives us what? 2,000. So department A has what? 2,000. Department B, the same thing on the basis of purchases, 8,000. 8,000 over what? 30,000 times what? 5,000. So this one gives you what? 8 divided by 30 times 5,000. This one is 1,333. Then for department C, we have what? 10,000 out of 30,000. 10,000 over 30,000 times 5,000. This one then is equals to 1,667. So we include everything there. We have apportioned all the expenses. What is left now is what? Balance off against our profit, our net profit, and that is all. So we have 2,000 for department A, 1,333 for department B, 1,667 for department C. When you add all the three, we get your what? 5,000. We get 5,000. So the last thing to do now is to get our what? Net profit. So we remove all these from all these to get our net profit. Net profit. This we balance off. Net profit. So from here we take them one by one. So then we say 11,400 plus 2,000 is equals to 13,400 for department A, total income. So we are removing all the expenses minus 827 minus 680 minus 1600 and minus what? 1,500. So here we have 6,793. Then for department B, the same thing, add up 4,990 plus 1,333 plus, wait, that's all. So 4,990 plus 1,333, 333. Then less our expenses. This one gives us equals to this one, the total for this is then 6323. So 6323 minus all the expenses, 413 minus 2680 minus 1600, then minus 1500. Gives me what? 130. Then for this, Department C, then I have 7080 plus 1667, which gives me what? 8747. 8747. So from here, I can deduct all my expenses. Minus 55, minus 500, minus 840, minus what? 800. So this then gives me what? A profit of 6552. So you add all these three, it gives us our total plus 130 plus 6793 is equals to 13,475. So you have a total balance here as well. 6323 8747. So what do we have here? 827 plus 1000 plus 1680 plus 1600 plus 1500 plus 6793, which is equals to 13,400. We have the same 13,400. So our total here will then be 6323 plus 8747. Then our total profit for all the departments now is 28,470. 28,470. So that is what departmental accounting done and dusted. Yes. Thank you.